The final panel discussion for today, which will pick up from the prior panel discussion, this time looking more closely at how to balance innovation and regulation of digital assets. And the moderator of the panel is Mandy Naidoo. She's the Chief Compliance Officer at Yellow Card. Mandy, please join me on stage, and will you introduce your panel? Would you like me to do so?
Thank you. My esteemed panel will actually be introducing themselves.
Oh, wait, okay.
We're going to flip this up a bit today. Okay. Can we come up and join AIM? Okay, let me stand up and introduce myself. So hi, everyone. I'm Mandy Naidoo. I'm actually the Chief Compliance Officer at Yellow Card Financial. We are a crypto exchange based, actually operating in 16 countries across Africa. And I just happen to be based in Johannesburg, South Africa. So I see Angela's coming in to join us. I did mention that our esteemed panel will be introducing themselves. Sorry to put y'all on the spot. Andrew, should we kick it off because you start with an A?
Sure, happy to. Thank you. And thanks for having me on this panel. It's a pleasure, but I'm sorry I can't be there in person. So I'm Andrew Whitworth. I'm Ripple's Policy Director for EMEA. Ripple's a global business-to-business blockchain infrastructure company for cross-border payments, if you don't know. So we help our clients move value cross-border and cross-currency using blockchain more cheaply, transparently, quickly, and sustainably than is usually possible via traditional means.
Thank you. Cedric?
Hi, good afternoon. I'm Cedric Ming. I'm coming from Switzerland, working at EY, the global audit and consulting firm. I'm in the legal department, and I am focusing on advising clients on digital assets and financial crime compliance. And basically, we're at the intersection of law and technology and business. Glad to be here today, and thank you so much. I'm really sad that I wasn't there, but hopefully next time we can get some avatars of me and Andrew there.
Yeah, definitely. Thank you, Cedric. Angela, shall we start over to you, right on the other side to introduce yourself?
Thank you, and apologies to you.
No problem at all.
And to the audience for coming late. So I'm a lawyer at the law firm ENSafrica, where I head the financial markets regulatory division and co-head our Pan-African Fintech division and give advice to clients and to a range of entities on blockchain, cryptos, and related activities.
Wonderful. Thank you. We at Yellow Card, I know it's giving out information, but we often use Angela. She's really a stalwart with Mark.
Hello, everybody. Hope this is working. My name is Mark Chirnside. I'm the CEO of Xago, and unlike the rest of the esteemed panel, I'm actually on the receiving end of regulation and implementing it. But I've been doing it for a long time, so I'm looking forward to this.
Ben?
Yeah. Good afternoon, everybody, and thank you for sticking around for the graveyard shift. My name is Bazane. I'm a senior analyst at the South African Reserve Bank. I look after crypto for the SARB, and I'm also the Crypto Asset Regulatory Working Group Chair. That's under the auspices of the IFWG, and that's a structure between 7 financial sector regulators. And its endeavor is to craft alignment and create consistency in our response to fintech. And my responsibility specifically is related to crypto assets and that world that exists there.
Thanks. Wonderful. Thank you. So to everyone sitting out in the audience, I'd just like to throw out a challenge to you. We'd like to make this session as interactive as possible. So we're going to go through and have a few questions for our panel here. But if you have any thoughts or any questions, anything coming up in terms of innovation, what does that look like in regulatory terms? And maybe if you were even thinking of creating a company, setting up an exchange somewhere. I know we've got quite an esteemed panel here. They'll be able to give further feedback and insight on how how we can start achieving those innovative challenges. So, Andrew, I know with your extensive experience, let me recalibrate there. I just want to start off with you because obviously you're looking at things from a global perspective, right? Before I get back into Angela and Ain here and how things are working maybe in South Africa, I'd like to get some insight from you on, what's this balancing act that we see with innovation and regulation? And, who is this really benefiting? How can we all, come into this and work a win-win situation?
So thank you. I think that's the core question, right? For me, the key point is that there isn't necessarily a trade-off between regulation and innovation. The way I see it, regulation is the platform that builds innovation. That's quite abstract, but the way I think about it is that regulation, and by this I mean proper full regulatory frameworks, give businesses the certainty they need to build their products and services, as well as their teams and human capital. And it's these services that promote innovation and can make financial activities more efficient, more user-friendly, and ultimately lead to economic growth. So the regulation builds trust by giving consumers protection, businesses certainty, and by signaling to the wider financial and economic ecosystem that a given firm or activity is legitimate and has been given considered treatment by the appropriate authorities. And that has a commercial effect too, right? By unlocking business relationships that may otherwise be more uncertain. So there is, of course, still a balance over the question of what type of regulation and how much. So, if a jurisdiction gets regulation wrong or deliberately uses regulation to push down an innovative sector, of course, that would have a negative effect on innovation and sectoral growth. But the good thing is that for the crypto sector now, there's a growing international consensus, I think, on what good it looks like. I would say that the core of this is the principle of same activity, same risk, same regulation. Because that implies technological neutrality and a level playing field between blockchain-supported finance and traditional finance, and regulation based, again, on the respective risks of the activities undertaken. So it's the activity that's regulated, not the technology that enables it. For me, that's the key point.
Yeah, and important clarification on it. Mark, I want to throw it over to you because you mentioned you're the receiver of the regulation. So what do you think of what Andrew is saying, and how can we get regulation in the space and have it win-win?
Yeah, thank you. I've been on the receiving end of e-money in Europe, e-money in South Africa, PSD2 in Europe. So I've been through a number of them, to say the least. And I think one of the things that gets overthought is the fintechs have to enable themselves to be, the cost of acquisition is high. By putting the regulation, the cost of acquisition just goes through the roof. Now, I'm a believer in regulation. I've settled with that, and it needs to happen. But then the ongoing retention costs are higher as well. So that we're now getting regulated very similarly to banks, or will be very similar to banks. It worries me that we're actually changing banking regulation to crypto regulation. And is that the right journey that we're on?
I think that's up for deliberation. That's quite an interesting point. Maybe I'll pivot over to you then, Ain, on that, because both Andrew and Mark have brought in, different aspects of it. It has to be fit for purpose. So how do you see it playing out in Africa? Obviously, there's different ways that we're looking at. It's either cryptocurrency or it's an asset. How do you see it playing out in Africa in terms of travel?
I think that Africa is a microcosm for the world. So every regulator has gone in a different direction because our policy objectives as jurisdictions are different. So you have entities like Nigeria that has instructed the banks to stop playing with the crypto asset community because they want to safeguard that stability mechanism there. You have the CAR where it's now legal tender. And then you have South Africa that's very much following a risk-based approach. I think the consensus is that we're waiting for crypto to land and really realize its use case. You can't preempt that kind of development by insisting on regulation right now, because then you run the risk of playing it into a corner and stifling that innovation. So we've gone risk-based. And what that looks like for us is really that consumer protection is really high. So you'll see that the FSCA have declared crypto assets as a financial product. Under phase, you have the FIC and anti-money laundering and terrorist financing. And in addition to that, cross-border flows, because we have exchange controls in South Africa, is another big consideration and big risk set. From there, the idea is that we will have better data on the sector, and then we can start using that data to inform further policy decisions or further regulatory actions. Right now, it can't just be, it looks like a duck and therefore we're going to regulate it like that. We need to see what the market decides to do with this innovation. And accordingly, regulations will follow from there. And it's always going to be risk-based, and we endeavor to be proportionate to the risk that's being introduced.
Okay, thank you. Then maybe, Angela, this is an opportune time to bring you in, because Anne just mentioned FSCA and the FIC actually deeming crypto companies and virtual asset service providers accountable institutions. You want to touch on what those types of entities would need to do if they were looking to do business in South Africa?
Sure, thank you. So, notwithstanding the fact that we have these measures, one of which is currently in force, and that's that all crypto asset service providers have to register as accountable institutions, I still hear almost every day that crypto assets are unregulated in South Africa. Now, if you take away nothing from me, I would hope that I'm able to disabuse you of that fact. Crypto assets are regulated, of course not fully regulated, but what every player in the crypto asset space has to do as of now is to register as an accountable institution. The day has actually come and gone, and if you were to register now, you would effectively be out of time. But there's a lot of debate as to when one counts the 90 days from which you would have to register. So register is the first. I think that's the easiest of the lot. It really is a very easy process. You can do it on the AML or the FIC Go AML website, but it's what comes with the regulation that is quite difficult for most of the new players and the existing players. So very briefly, what it means is that you've first of all got to appoint a compliance officer. Secondly, you've got to have a risk management compliance program. You have to do customer due diligence. You have to do training. You have to do sanction screening, although not in every instance. And I know that sounds odd, but I'll come back to that in a minute. And as I say, reporting and record keeping. Now, again, for those people who I speak to, I say, you have to, do you have a risk management compliance program? They say, yes, we do. Thank you very much. We sorted. Now, I don't believe that's true, because while you might have had one historically for being an FSP or for being another entity that had to register, the changes that have been brought about by the December amendments, I'm jolly sure you are not 100% FIC or FICA compliant. And I would urge you, as a very minimum, to do a gap analysis with what you currently have and with what the amendments are now requiring you to have. So just very briefly, if I may, 1 second, and I know
No,
a lot of
go for it.
Aine touched on the FSCA and how crypto assets are now financial products, and people who deal in them have to register. Now, we heard a lot about it, and we know the June deadline is coming up, but we need ongoing information as to exactly what we would have to do to register as this bespoke category of financial service provider. And then the last, which Aine will be so happy I don't have any time to elaborate on, but regulation must be certain. And I think it's imperative that we as a community have to know how the central bank is going to treat cross-border flows.
Yeah, key points. Thank you for touching on that. Cedric, if I can bring you in, because listening to, various views here, as well as the regulatory and what, each type of cryptocurrency or virtual asset service provider would actually need to do to become compliant. I mean, in your view, with all the work that you're doing and everything you're looking at globally, if you could pick a country to actually set up an exchange, looking at regulation, cost, because costs are massive, right? If I look just at Yellow Card, and sorry, I digress here, we've actually had to go and raise Series B funding externally, which is VC originated out of the US, just to be building in Africa. So the cost of acquisition, the cost of bringing on a customer, the cost of engaging with regulators continuously to ensure that you are fit for purpose is an ongoing activity that requires a lot of money, time, and perseverance, right? So I challenge you now, Cedric, if you had to choose this country that's covering all of those bases that I've just pointed out to set up an exchange, what would that be? And let us know why, please.
Well, that's a good question. I think that's sort of difficult to answer because, as we all know, crypto regulation is changing so fast, and I don't think we can. I don't think, first of all, the industry can even keep up with all the different regulations that are coming in, whether it be from the US, which has traditionally sort of taken this sort of very liberal approach and decided not to really regulate a lot. I think the only real regulation at the beginning was that Bitcoin was treated as a commodity, and then on top of that you have now you have like this wave of regulation by enforcement, which is basically not really conducive to giving clear guidance to the industry of what is the best or what are the requirements, and that makes a comparison to other jurisdictions also difficult because it's a bit of a moving target. In the EU right now, we have obviously MiCA, which is in the final phases of being translated, and then will probably come into force in June, but then have a transition phase of about 12 to 18 months. In Switzerland, we're not part of the EU, so we sort of, we're the home of Crypto Valley. We have over 1,000 crypto firms in the country that have stayed here since the beginning of the blockchain days. I want to remind everyone that we're the home of the Ethereum Foundation, amongst other famous crypto companies. So we've in Switzerland, for instance, we've begun thinking about what are the regulations and what's like the basic minimum of regulation that actually is required. And I think in comparison to, let's say, the EU, we have a lot clearer, a lot less stringent, and to be honest, it's more understandable to the industry what actually is required to them. So I'd have to say, to be honest, to set up an exchange, probably with all that in mind, and also what I just to pick up on what I think what Ain was saying is that, or one of my other colleagues, I think it was Angela, that we need to also consider what's the full cost, right? And what's the cost of setting up a business, and what's the cost of dealing with a regulator? Because there's some regulators, again, not jumping back to the US, but there's some regulators that just don't respond, or they have a really lengthy time to get started. So I'd say probably to set up in a crypto business in general, probably Switzerland is probably one of the best places to set up, because we have a mature ecosystem, and we also have a mature regulation. We've actually had a blockchain regulation that's been through the parliament and been enacted already in 2021, and we've really basically just regulated the bare minimum. And we also have, for instance, like this new category of a DLT trading facility, which allows you to trade crypto assets on a registered exchange. And there hasn't been, per my information, there hasn't yet been one that's been issued yet, but they're about to come out right now. So I think, Switzerland is probably one of the best places. I can't really say with definitively where that would be, because again, crypto regulation is changing so fast, and I think even Andrew can say a little bit more about the other regulations that are coming out in general. Let's say in UAE, right? You had VARA, which just came out with a fairly comprehensive set of regulations for the entire industry. applicable immediately without any sort of real warning to the affected companies. So yeah, I'm gonna have to say Switzerland is definitely a good location to go with.
Thank you, Cedric. I'm not sure if that's a residential bias, but we'll move on to Andrew. So Mika's been mentioned by Cedric, right? So when we look at crypto virtual asset adoption, we've got Asia leading the pack with North America coming in, and then close third is actually Africa. So we've got 54 countries sitting in Africa, right? Whilst Mika may be awesome in the EU and regulations coming up in North America, we actually need something fit for purpose in Africa. And that's what we at Yellow Card are actually trying to build, that rails and network within Africa, because it's a very different use case. The utility of cryptocurrency, virtual assets is very, very different in Africa. How do you see that playing out day to day, Andrew, in your world?
Yeah, and I think that's a very important point. You know, this is a very global industry. It's not just the US, even if it maybe started there 10 years ago or so. And I would echo a lot of what Cedric just said, particularly around the problems of regulation by enforcement compared to what I was talking about earlier, a comprehensive, clear regime that you can build on. And I, again, would echo a lot of Angela's points around that. I mean, to your point specifically on Africa and its adoption of crypto, I mean, I think this is fairly obvious, and it goes to what Aina was saying earlier. The important thing is for each government or authority to decide what objectives, what policy objectives it has for the crypto sector in its own country. You know, it could be, for example, improving remittance flows, which is something, you know, as I said, that Ripple helps with, or it could be to drive financial inclusion or to enhance and grow the domestic financial sector, ultimately leading to economic growth. I mean, of course, you can have multiple objectives too. Once that's decided, then you decide how to regulate it and what the robust or comprehensive regulatory regime should look like to allow this to happen. So, I mean, for us in Ripple, given the nature of our business, cross-border payments, of course, the interesting aspect of crypto usage in Africa is the payments use case. We have a product called On-Demand Liquidity, ODL. I don't know if any of the audience saw my colleague Brooks speaking yesterday. You know, we're excited about the opportunities this presents for the continent. We've got a partnership with MFS Africa, which we're using to expand our presence in the region, to scale our business alongside local partners as digital payments and crypto adoption grows. And I mean, as you all know better than I do, digital payments innovation in Africa has been evolving like at a really rapid rate, which is why obviously we're interested in doing more business in the region. But this is for a number of reasons, right? This is fast population growth. This is digital payments usage already. This is mobile payments. And actually in crypto adoption by consumers, Africa's world leading. You know, instead of using crypto for speculation purposes, as is often used elsewhere, many people in Africa are turning to crypto to make peer-to-peer payments and as a way to preserve wealth. So this is quite an interesting set of use cases, all of which is doing what, as I said in my introduction, Ripple wants to do, which is helping to move value cross borders and cross currencies where necessary. So Africa's a great opportunity, and it has an opportunity to be a great trailblazer and to leapfrog the West as it did earlier with mobile payments.
Yeah, definitely agree with you. I think the bigger recent stats show, I think it's about 400 million adults in Africa. And I think 45% of them are actually unbanked, which means that opportunity just to bring products of value to them is just really immense. Mark, I just want to pivot over to you now with innovation and speaking about Africa specifically. How has innovation now helped with your onboarding? The business that you are in, how is it actually making things easier? And do you have like regulatory obstacles that actually come up in your day to day?
No, we've dealt with 3 regulators in the last 2 years in Africa. So if I try to name them, but Mauritius was actually quite good, very mature, very reasonable process. Namibia more recently, that's very nascent, but following one of the South African process. And the IFWG was actually a very pleasurable experience, not just because you're here. It was a very pleasurable experience, a positive environment to get things done. And we worked hard with the team there. What's challenging, I think, for us or for other companies using us is the banks that use our product are having to do the KYC, and so are we. They're doing their AML checks, and so are we. They're doing their counter-terrorist financing processes, and so are we. Now we're doing the FATF rules. And then the Bob reporting, are we doing it or are they doing it? And so we've got a lot of challenges around doubling up, I'd say, at the moment. And what does a bank do or what doesn't it do? Where does a bank sit in this process? What can it do under Prudential? What can't it do under Prudential as well? So I think we have a few more challenges, but the values of transactions are different as well. So when we go to Europe, the values are much higher. And so when we're dealing with 100 Rand cross-border, starting to put processes in place to onboard them, which is costing maybe 30 Rand. It's going to take many people a long time to return the revenue.
Exactly. So with that said, and I know you asked me not to throw you under the bus, but I have a question that maybe Angela can pipe in a bit after. We're mentioning costs. Innovation is actually and bringing, this digital way of doing business, onboarding, monitoring, reporting, just bringing services across Africa. Are the regulators actually getting together and talking about this? Is there lobbying happening in the background to actually make it easier? Because you spoke earlier about travel and how we need to look at whether it's designated as an asset or currency, but are regulators actually looking at the cost benefits to the actual consumers? Because we're all in this for scalability. We definitely want to make it safer, cheaper, easier to use. But how can we get better regulatory engagement, progress, the ability to get bank accounts, Angela, not just de-risking, how do we get to this point? Do we start lobbying actively with the regulators? Do we get, big partnerships? How do we go about it? Is like a starter kit? Do we have to join a fintech working group? What are your thoughts?
I think there's a lot to that question. And I acknowledge, I'm the first to acknowledge the complexity of this environment and trying to get the regulators here. What I want to start with is give you the assurance that regulators do have these conversations. Consumer outcomes are really important to us, right? And so is ensuring a level regulatory playing field, because that's the one way you ensure that all of your participants are on equal footing and they're able to compete, and as a consequence, give the best product and service to the end user. That is why we exist, right? And we want to ensure that there's fairness, transparency, efficiency, and all of that good things in that. Regulation is a really complex space right now, not even withstanding the conversations that we've had over the last 2 years about the direction that this innovation keeps on going into. I think regulators sit, and all of these systems are so complex and interrelated that pulling on one lever has the potential to knock on and have a domino effect in a different area that you don't necessarily want to impact in a negative way or any way at all. The regulators in South Africa have always had a collaborative approach to this. There's an acknowledgement that the people in this room understand the sector a lot better than we do, because you're at the coalface every day. And as a consequence, over the years, we've had numerous engagements with the sector, whether it's via these conferences, whether it's one-on-one engagements. We've maintained an open door policy. We continue to talk. And one of the other big structures that exist under the IFWG is our regulatory sandbox, of which Xago was a participant. We also have the regulatory guidance unit, of which I am the co-lead. And there, anybody can come and ask a question because they don't understand the regulatory framework. It needs to be a pointed question. You need to have done your homework beforehand, but that is what it is. We are one centralized point of contact where any innovator can come and ask, I don't understand how this law applies to me, or I think that this law is outdated when you look at my innovation. And we will sit there and we give it due attention across the 7 regulators, one stop, 7 regulators, everybody comes and gives you their feedback. It's never going to be as fast as the fintech community wants it to be, right? And we must make peace with that, but it's onboarded, it is considered, and we give out, I believe, really balanced and well-reasoned responses to that. Where we can't give you that answer, the regulatory sandbox becomes an option as well, but that's also a very tricky component, because you need to have, it costs money, it costs time to come and play in the sandbox. And for you to do that, we need to know that We have it in our plan to change the space. This is a priority area for us. This is an area that we want to figure out. And then we let you play so that we know that in the next year, 2 years, you'll see the kind of change that your product requires, right? Unfortunately, it's a complex environment. It's going to take time, but I think that the South African regulators in particular, I can't speak for any others. We have an open door policy. The website is there. Please drop us your queries. Please reach out to us. And we can have these conversations. There's no need for a big lobby group. It just is about, there's an acknowledgement, and I guarantee you that it's being focused on. We spend a lot of time on fintech-related matters.
Okay, thank you for that. Just coming back to that point that Africa is now third in terms of adoption. So we'd really like to see this, flourishing in Africa, because there's definitely the use case for it. No, we mentioned that 5 minutes at the end was going to be put out for any questions to anyone in the audience, please, because we want to make this as interactive as possible. Do we have any questions on the floor? Yes.
June 1 through November. Where are those, the registration requirements for crypto asset service providers that are supposed to commence from June 1 through November? Can you speak to where those are at? Is that a date that's set in stone? What the requirements may be, or whether things may change between now and June 1st?
Yeah, thank you for that. And maybe Anne is better positioned to answer that, because where I was last at, we have a lot of inquiries from our clients saying, when we look around, it'll be June. What do we need to do to register as a financial services provider in that particular category? Now, I can give them plenty of generic advice to this effect. Any FSP, financial services provider, is going to have the following policies in place. Whether you, as crypto asset service providers, will be regulated in terms of your own code, such as there's a foreign currency code, there are a number of discrete codes. Will that regulate you in addition to the statute? I just don't know. So I have heard nothing about the moving of the deadline. But if I were to take a bet, I don't think that registrations are going to be open and regulators are going to be ready to register entities as crypto asset financial services providers. But that doesn't mean that you should start doing as much as you can in advance of the date, which hasn't been extended. But Anne, I'm in your hands.
So I want to believe that the Financial Sector Conduct Authority, whose legislation this is, they will communicate in due course, and they're fairly good at communicating these things. It is a new area, and there's a lot of work going into making this process as easy as possible, spreading the net as wide as possible. The one thing that I do want to say is that it's not a registration, it's a licensing process for the FSCA. So that means that there's approval that will go back to you. But the FSCA is really good with communicating these things, and I would suggest that you just keep an eye on the website, and it will be communication in due course. I can't provide anything. I say would be speculation, and that would be very inappropriate.
No problem. Thank you. Any other questions? Okay, thank you for one question. Maybe we can end with thoughts then, because I feel like we also want to be bringing up some sort of challenge to the regulators to make this fit for purpose, right? Mark mentioned quite nicely, this can't be a copy and paste from fiat into crypto, because it's very different. But how can it be made fit for purpose, Andrew? Any last thoughts from your side on what you're working on and what you're seeing and what we can bring to the table? You and Cedric, please. And then I'll follow on to lastly to the panel.
Yeah, thank you. So, I mean, my last thought is that, there's a huge market opportunity for cryptocurrency in Africa, despite some barriers that we've been talking about, but it does need robust regulation. And currently, only about a quarter of countries in sub-Saharan Africa formally regulate crypto. In terms of what the regulation looks like, I agree with Mark that we don't want to be cutting and pasting from banking into the new sector. That's not appropriate. But what is appropriate is finding where the activities are similar and then regulating them in a similar way according to the risks that they pose or potentially pose. That risk-based, activity-based regulation. I actually think, Cedric mentioned it earlier, but I actually think Dubai's Virtual Asset Regulatory Authority, VARA, has a good approach. in its multiple rule books. So it has, slightly confusingly, 4+7 rule books, 4 that you have to comply with, and then 7 by activity, and you comply with the one that is relevant for you. I think that kind of approach is a nice way of balancing out core requirements on any financial institution, the kind of thing that Aidan and Angela have been talking about, and yet also making it proportionate for the business and the risk that you undertake yourself.
Thank you. Cedric?
My last thought is that what I'd like to see also from regulators or jurisdictions in general would be also with proportionality in mind, to sort of make the barriers to entry lower, which I think my colleagues here were also saying, because we don't want to over-regulate to the point where it's just becoming so difficult to get into the market, and it's just basically cementing the position of the incumbents, and it's just gonna, at one point, it's going to stop innovation. So what I think is really what would be good to have a sandbox that allows you within a certain, let's say, narrow space to test your business idea, and not make it like something that's limited. I understand the approach that the governments might take, because they have limited resources and they can't, have oversight over all these different projects. But I think in some way we need to think of a way that in a really small place, in a really small scale, allows startups to flourish, test their ideas, and grow. And there shouldn't be a limit on the number of startups that can join this sort of sandbox. That's sort of my point of view.
Yeah, I like that. I think it means, do we actually put a price on creativity, right? Because that's what innovation is. Are we going to box that all up and not move forward? So nice perspective there. Anyone else here? Mark, you want to have last thoughts? Angela?
I can always talk. I think as long as the regulators keep listening to the industry and feeding back to the industry, and the implementation of those regulations from a risk and perspective are clear to the fintechs, I think then particularly in South Africa, we have a very, very vibrant future ahead of us. In Africa, it's a little bit different timings, but I think as long as that continues, and the question you just asked about the timing and the process is clear, I think we're on for a good future.
That's great. Angela, you want to add anything?
Yeah, I want to say one thing, which I understand is provocative, but I think it must be said. So hats off to the fintech unit, which Jane and the other lady head up. Hats off to the IFWG and to the FSCA. I must say they are very helpful and very welcome. But what I really want to say, and I'm going to say, albeit at my peril, I think that the Financial Surveillance Department now has to nail its colors to the mast as what is a crypto? Is it an asset? What is it? Not just for purposes of classification, but if everybody are huge proponents of financial inclusion, and everyone loves to play the financial inclusion line, why are we not getting proper direction and guidance from our central bank as to whether or not crypto constitutes capital for purposes of exchange control? It's not good enough to answer in a FAQ, and it's not good enough for people to have to dig around a policy or a consultation paper to find an answer. And the FAQ and the consultation document are at odds with one another. How can a person send money to his family in Zimbabwe? Okay, we understand he can use an authorized dealer, but what if he were to send Bitcoin or crypto rather than fiat? He can't, because capital is seen to encompass both fiat and crypto. And if that is so, say it, but don't leave us in limbo.
No, I really appreciate that. I would like to also jump on that bandwagon to say to the financial services industry that give people choice. Let them choose what product and services they want to use. We at Yellow Card also bring in cryptocurrencies and when they exchange. So we are all here working together for the customer, for the benefit of everyone on this continent. So we're not here to compete. We're actually here to enable people to bring about financial inclusion and financial independence. So let's all try and work together, and happily, please stop de-risking the crypto industry and give us all bank accounts so that we can work together nicely in Africa. So that's it from me, everyone. Thank you to my panel. You guys have been awesome with all your responses. And thank you to Sonia. I'm just going to hand it over for having us over and actually enabling this type of conversation. We know we had the graveyard shift, but we hope we've ended with a bang. So thank you all.